My name is Lee Harris from Emoji Trading. At Emoji Trading, we make add-on software for Sierra Chart, which helps traders visualize supply and demand using order flow, and this allows you to make informed trading decisions. Today, we're going to use some of that insight to take a look at support and resistance, and maybe this will make you question some of your thinking about these, and maybe also make you wonder about some of the advice that you may have previously received. Before we go any further, though, we've got to go through a quick disclaimer, which is futures and forex trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they're generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk of actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect trading results. I'm also pleased to say that in the preparation of this presentation, we didn't do any animal testing. All my charts were prepared on humans. So let's get into it. Most traders typically begin their trading journey looking at price-based charts. There are candlestick patterns, there are indicators derived from price like moving averages, MACD, RSI, stochastics, Bollinger Bands. Maybe you've put a simple volume histogram at the bottom of the chart because you've read the received wisdom of look at volume for confirmation. There are some limitations to this approach of looking at the market though. Firstly, price is a function of supply and demand in the market. And you think about this when you're buying a house or buying a car. You have a certain budget, and that in turn determines what you look at. If you've got more buyers than sellers in any market, price goes up until we run out of buyers. If there are more sellers than buyers, price will fall until it's at a level that is too low to be attractive for people to sell. So price kind of gives us a summary view of supply and demand rather than enabling us to see the true state of supply and demand. So by looking at price alone, we're one step away from the supply and demand. And then if we use indicators which are calculated based upon price, this moves us a step further away once again. These indicators actually lag the movement of price. So by the time an average retail trader sees that MACD lines have crossed or we've touched a Bollinger Band, we're way behind the actual event in the market caused by supply and demand that resulted in a shift in price. Let's then think about chart patterns or other lines that get drawn on charts. I'm certain everyone on this webinar knows how to recognize a head or shoulders pattern or a double top and has got some understanding of how you trade it, based upon the conventional wisdom that we read in technical analysis books. The thing is, the majority of the people in the market are looking at the exact same thing, and this creates opportunities to trade both sides of what's seen. So let's think about head and shoulders pattern. Why does it have a neckline? Well, it's there because something happened in the market to create demand at the formation of the neckline. Something actually triggered the demand before the left shoulder even formed. At the time the left shoulder completed, the demand was still there, and it was still there before the head even started forming. And so this continues. If you think about this a little bit further and look at the trend line at the bottom of this graphic, how many touches of a trend line are required to identify that we actually have a trend line? We need at least 2 before we've got the potential of a trend line. Then the received wisdom is trade the retest. So that means we're looking at the 3rd touch as a minimum before we even get into the market. Something else a lot of traders will look at is levels. Here I've got a chart of the Bund from this morning. And on this chart, I've overlaid the daily pivots. Now, pivot points came about from the pit traders who used them as a really quick way to assess today's potentially interesting levels that were based upon the previous day's high, low, and close. You take those three values, you divide them by 3, and that gives you a quick way to calculate and scribble down on a notepad some key price levels for today based upon what happened yesterday. So if you're standing in a trading pit and you're a local, you've got a pen and paper, you can't do much more than actually quickly calculate some prices, but you're gonna base your trading ideas based upon how the market reacts at the levels which you've thought about at the start of the day. So what's the actual significance of these levels, whether they're pivot points or Fibonacci's or whatever? Nothing. They're arbitrary. The thing is, lots of market participants are looking at these levels and they're making decisions based on these levels. In order to get an edge, we need to be able to see what's happening at these levels, and we can use a view of the volume that's traded at these levels to start to bring this to life and get an edge. Here's the same chart of the Bund from this morning. You can see on 16th February at the bottom of the screen. This is a chart style known as a footprint chart. It was created by Market Delta. Footprint is a registered trademark of Market Delta. And what this chart shows us is how many contracts traded at market lifting the offer, in other words, buying at market, or hitting the bid, in other words, selling at market. This gives us some idea of the aggressive or the initiative activity of traders. This in turn can give us some clues about supply and demand. For example, at a given price, if many more traders bought at market than sold at market, then we can assess we've got more demand than supply. But let's not forget that for everybody who buys or sells at market, they're trading against someone else who has a working order in the market. Someone who buys 100 contracts at market is buying these from traders who have got stop or limit orders working to sell at the same price level. We can then look at the reaction of the market to the buying or selling that's occurring. And by looking at this reaction, we can start to understand a little more. For example, if the amount of buying is falling as price rises, it's a sign of exhaustion. In other words, we're running out of buyers. If we've got really heavy buying, but price doesn't go up, then this is a sign of absorption. In other words, whoever is on the other side of the trades which are happening at market is more powerful. This person is happy to sell as many contracts as the market wants to buy. At some point, there's likely to be no more buyers. So what happens? Some of these buyers will sell, price will fall, whoever was starting the selling will show some profit, maybe they sell some more aggressively at the market, even more of the earlier aggressive buyers will sell, and price falls further, making the powerful seller, who is absorbing all the buying, some more profit. And that is the basis of how the market works. Buyers and sellers trade, which moves price up and down in order to satisfy supply and demand. Some of these traders are speculators and day traders, others are commercial traders fulfilling needs for their investment portfolios or their commodity needs. Now, many trading platforms provide some footprint chart type of visualization. And if you're not looking at traded volume, but instead you're just using views of price and indicators derived from price, then I suggest you're only seeing a small part of the picture and actually you're trading at some disadvantage. The thing is, reading the traded volume really takes some practice. There's a lot of numbers on the screen. Visualizations of order flow events can really help to make this easier. So here's the previous chart, footprint chart, on which I've added the daily pivot points that thousands of people are looking at and making decisions around. Now I've added some order flow visualizations. And what these visualizations show me is, firstly, when we have aggressive supply or demand, that's the dotted blue lines and the dotted pink lines. These are indicators. The dotted blue line, we've got some aggressive buying. The dotted pink line shows me I've got some aggressive selling. The pink and blue boxes show me when we have a reduction in supply and demand combined with aggressive trading in the opposite direction. So you can see at around 158.22 at a resistance 1.5 on the daily pivots, we've got new supply coming into the market. combined with a lack of buying. Now, what we can also see is that was combined with an earlier level of some aggressive selling, and coincidentally enough, it's at a daily pivot. The thing is, if we can see these supply and demand events, why do we actually need to see the levels that everyone else is looking at? We don't need to care that we've got a pivot point or a value area high or low, or a MACD crossover from a retail trader's 5-minute chart. All we want to know is that we've got supply and demand in the market that we can lean on, and consequently we can trade in the right direction with tight stops and defined targets. So now I've removed the daily pivot points from the chart, and I'm just looking at the supply and demand, nothing else. And what you can see is my chart has become incredibly clean. It's freeing me from any distraction or presumption in my trading decisions. It's also a good way to avoid being impatient and second guessing the market. Now, one of the things that the arbitrary levels like pivot points don't show us is the actions of commercial traders that may kick off support and resistance. And for example, if Exxon want to hedge their revenues or American Airlines want to hedge their fuel costs for next month, they're likely to trade at some level in CL oil futures, which has got nothing to do with a pivot point or a MACD. They're trading based upon their own business needs, and no price-derived indicator can ever show us that. We can only see this kind of external activity into the market if we're able to visualize the market's underlying supply and demand. So here, while we can see that we've got some supply and demand occurring around the pivot points, we can also see from some of the blue lines and some of the pink lines, there are supply and demand levels that have got nothing to do with these arbitrary price-based levels. So when it comes to support and resistance levels in the market, whether it's a fixed price level or a trend line or a supply and demand event that triggers the start of potential support and resistance, it always starts with supply and demand. And then the subsequent trading activity at this price level tells us what's actually happening. The widespread advice that you see in many trading textbooks or on trading websites is that the more times a support or resistance level is tested and it holds, then the stronger it becomes. You see this on many sites. You can see it on some brokerage sites. Now, we know from that chart earlier that we need at least 2 touches of a price level before we even know that there's a potential support or resistance level. And if we're cautious, we might want to see whether the retest, which is the 3rd touch, holds or not. Once you understand and trade using visualizations of supply and demand, you'll see that saying the more times that a support or resistance level trades, the stronger it becomes, is actually like saying that if you're playing Russian roulette, the more times you pull the trigger, the more likely you are to survive. Let's take a look at this and see how it plays out. If I load a revolver with a single bullet, each time I pull the trigger, the chance of, a really bad outcome is 1, because there's a single bullet, divided by the total number of chambers that haven't been fired. So when I pull the trigger the first time, the chance of me losing the trade is 1 divided by 6, 16%. On the second pull of the trigger, I've got 5 chambers I haven't fired, so it's 1 divided by 5, 20%, and so on. At the time I've pulled the trigger 4 times, there's a 50% chance of me blowing my brains out. So let me ask you this. If you pull the trigger 5 times and you're still alive, do you feel lucky? And the same thing applies to support and resistance. Saying that the more times a support level is tested and holds confirms its strength assumes that there is always demand at this level. Now, I don't know about you, but I don't believe that there is infinite demand or supply within any of the markets that we trade. For a support level to hold and get stronger, it means that irrespective of however many sellers sell at market, we have a buyer who is prepared to keep buying. They don't buy that, and I don't buy it. As we look at this chart here, and we've got the head and shoulders, at some point, we ran out of demand. And as we've gone down to this potential trend line, you know what, maybe we're going to see infinite demand again. We'll see. So let's go through some real examples. It's very easy when delivering this kind of presentation to go and cherry pick charts and find some absolutely fantastic examples which allow us to show anything we want. So I thought I'm going to be a little bit dangerous. It's our first session here at Investor Inspiration. And through this morning, I've actually been screen grabbing charts of this morning's ES. And I've made some notes which I want to talk through through the next 12 or so charts. And you can start to see how by reading supply and demand, we can really make informed trading decisions. I'm using an emoji visualization here, which we call an Emoji Zone. I'm highlighting 2 or 3 specific supply and demand conditions in the market that highlight aggressive trading. Those are the pink and blue bars that you see across the screen. The orange bar is a level where if it's at a low, we have not yet reached a low enough price to stop selling, or if it's at a high, we have not yet reached a high enough price to run out of buyers. And these levels can act as near-term magnets for price, because the market will explore to see if there's more demand beyond the high price level or no supply beyond the low price level. And you'll see that these pink and blue bars change their appearance. So what the emoji zones do is the first time we've got a supply demand event, we paint a solid pink or blue box, blue to indicate demand, pink to indicate supply. We then monitor order flow each time we trade at these levels, and we use order flow to determine the strength of the supply and demand. When the level's tested, if the order flow suggests the level has tested and held, then we paint the box using a solid line as its outline. You can see that at 27.3250. If the level is tested and the order flow implies that it could weaken or has weakened and it could break, then we paint it with a dotted outline. And if it actually breaks, as we see at the 914 bar, then on the first break, we change its color to indicate support becoming resistance and vice versa. We keep track of these levels as they cycle from support to resistance until they break for a second time, then they disappear. So what was going on this morning in ES? So we can see here I'm showing from about just before 9 o'clock up until 9:30 on this chart. One of the things that stands out to me, and I just want to see if I can grab my mouse here. Here we go. I hope you can see my mouse pointer. Here at the high of the day at 36 3/4, I've got an orange band in some previous resistance area, which tested and held. So although our move up stopped within some resistance, the orange zone is telling me we're not yet high enough to run out of buyers. So this immediately is giving me a little bias that price could move higher. I've got a support level below me at 34 1/4. So as I'm looking at potential trades here, I'm thinking I'm potentially interested in getting in at 34 1/4. If it goes much below that, I'm out, literally with 2 or 3 ticks of risk. But I've got a defined target at the high of the day, 36 3/4. And this starts to show you how we can trade with very favorable risk-reward ratios when we use supply and demand. I'm also mindful that down here, at this low, which we formed at 906, so 25 3/4, we have a low level where we didn't actually run out of sellers. I'm also thinking in my head, it's the run up to a holiday on Monday. Trading could be a bit strange today. So although I'm thinking we're going to go higher, I'm very mindful that we have potential to go lower at some point during the day. We're about 2 points above the low here, although I've got some support below me which I need to break through. So let's see what goes on. Here we are only about 5 minutes later. Here's this price level and magnet, which was the high of the day, which I looked at. We can see this immediate support level, 34 1/4 held. We could have had a potential entry around this level. And we revisited what was the high of the day up here. So there's a first nice quick trade here to realize about 2 points. In this bar, we've made a new high, and I can immediately see I've got some more resistance above me at 42. And at this point, I'm thinking, okay, this bullish bias is kind of holding quite well. I have got some resistance above me that it broke at some point earlier. So I'm not so worried about the historic resistance here, but I see this as my next level as a target. So what happens next? Okay, we've moved through this soft resistance. I've scrolled my chart up a little bit here, and I can see that as well as resistance at 42, I've got resistance at 43.25, and a price level above which we don't know if there is more demand, so it will act as near-term resistance at 46.75. So here, as I was building the deck a couple of hours ago, I decided to do something really dangerous and put my name to some predictions. I don't run a trading room, but this is about as close as we'll get to doing it. So at 9:40 this morning, Central, I wrote down that we've had an initial balance breakout. This can happen on the ES, so that we break out of the range the first hour. And my immediate resistance levels are at 42, 43.25, and 46.75. And I've made a note that if we do revert, because at some point we will probably stop going higher and we'll go back a bit lower, I've got an interesting support level at 25.75. And just to keep myself really honest, I took a screen grab from my PC where I took these screen dumps, and you can see the timestamps. It's UK time, so that's 9:26, 9:31, 9:35, I think, Central time. Let's have a look at the progression of the markets we went on. Well, we continued higher, and look at that. We stopped at 42. This pink block is telling me we ran out of buying and we were met with some aggressive selling in the other direction. So our immediate bullish bias could stop. We hit a level. We didn't even test this resistance. We didn't trade into it. And we started to fall back. So the support and resistance levels that really start to get my interest now are, I've lost my mouse, bear with me. I've got a level at 36.75, and I've got resistance above me from 40.5 and this 42, 43.25, and 46.75 above me. Bear with me. Okay. So that's where we were. You can see we fell back here. We had some aggressive selling in the market. Through this aggressive selling, we created a new supply level with some resistance. But you can see once again that our support level here at 36.75 held. And we're kind of bouncing around now between these two levels. I'm feeling kind of bullish, but I'm also in a no man's land. I've got a level that's held. I've got some overhead resistance. I've got an interesting target up here. I've also got this 25.25 below me as something interesting maybe for later in the day. So we've been bouncing around a little bit more. What I'm now interested to see is this resistance which formed from the aggressive selling. It broke. It was tested by this bar, it weakened, and correspondingly it became support. So now I'm interested to see whether 38.75 holds, because it's giving me a potential run up here. I've got a bullish bias. I know this is below me held, but an entry around here, I may enter here because I've got defined 2 or 3 tick risk. My risk reward is quite good. This is interesting, but I'm still feeling a little bit like I'm in a no man's land. One of the trades I'm probably looking for in the day is how high are we going to go? Are we going to run out of steam? Are we going to come all the way back and find that 25.25? So then what played out next? Well, this 38.75 has held. There's some big absorption here at the buying. I can see 1,000+ lots traded at market buying. Someone was absorbing them, but I'm thinking that 46.50 up here is a target if we break through 42, but I'm remaining mindful of the 25.25 below us. Now this level 38.75 actually weakened. We're at the hard right edge. I'm wondering, is this it for the day? Are we now going to fall through the support that's here and here and here and see the 25.25, although it's only just coming up to 10 o'clock. But you see we're churning around quite a bit. So there's no decision to make here other than, you know what, let's wait and see what plays out. We churned around a little bit. We went through 36.75, and the orange band is telling me that price was not yet low enough to run out of sellers at this level. So that for me is kind of an early warning signal that maybe our bullish bias is weakening for the day. We've churned, we've gone lower, this support has held, but we've got a clue that we might go lower at some point later on. I've added a view here of the difference between buying power and selling power as well at the bottom of the chart. And what I can see is that at the high of the day, as you'd expect, we had quite a lot of buying power. On this push up, we have less buying power than we did at the high of the day. So although I'm still bullish, I'm thinking maybe we've got one more move. I'm feeling a little bit weaker. I'm still bullish, but I'm not necessarily feeling overconfident about getting long unless I've got a really good and well-defined entry. Then where do we go? We suddenly get this big up move. This is the same bar. And here's one of the things when you're day trading and looking at supply and demand. You can have your trade plan, but you have always got to be prepared for change and be prepared to get out or change direction. And this is the beauty that when you trade with a view of supply and demand, you can trade using very tight stops, literally 2 ticks, 3 ticks, 4 ticks. Now, we broke through 42, and look at how we stopped at the previous resistance level, which the Emoji Zone had highlighted. It hadn't been tested, bang on 43.25. We can also note down here at this resistance level at 42, which we broke through, we had strong buying through it. There is very little selling activity at this price level. This gives us a potentially good entry for a move up. It might seem odd that we're looking to buy at a point and a half off the high of the day, but we've clearly got some buying going on. We've got this well-defined level above here acting as a magnet. So we broke through 42, maybe we had a potential entry, and keep an eye on 42 as we go to the next chart. You can see at 42, a few more lots traded. So where we got stock up here, price actually ticks down. If we were watching this in real time, you'd have seen price bouncing around. There was a potential entry here. 579 contracts were bought actually at this level. We've broken through 43.25, and our 46.5 really becomes our next target. There's nothing holding us back here. You can also see we have a lot of buying power that happens in consequence as well. And you know what? We got to 5 past 10. It's the same bar on my chart, and we got just below 46.5. The orange band, the orange emoji zone at the top of this bar, tells me we haven't run out of buying at this level. We have got a layer of support below us, and that's from the resistance of the previous high of the day, which broke and becomes support. I'm still mindful of that 25.25 way down here, but in the immediate future, I'm thinking we haven't run out of buying near the high of the day. I've got a support level below me. I potentially have a good long trade at around, it's anywhere between 40 and 42. I've got a target around 46. If we start to get tired at 46, then I know that I've got a target at 25, which is almost 20 points below me. So we've got some interesting potential trades, depending upon what happens in our view of the supply and demand during the day. And then how did this play out? Here is that big bar. We traded down into that support. So this was new support that had been formed by the break of the previous high of the day. We fell back into that. It's held. We revisited the level, 46, 46.5, beyond which we did not know if we'd run out of buyers or not. So we had a trade of at least 4 points. That was the last screen grab which I took before joining the webinar. And there is no visible resistance above us. So it looks like, I haven't seen a chart since 11 o'clock Central this morning, but it looks like the buyers have looked to make some money for the holiday weekend. So I hope that little walkthrough gives you some food for thought about the received wisdom of the more times a support or resistance level trades, the stronger it becomes. At Emoji, here's what we actually think of that logic. You can see that consistently, each time a level trades, we chip away at what's there, and it becomes progressively weaker until it breaks. This was resistance, which broke. You can see through the progression of solid zones into solid outline zones into dotted outline zones that there is not infinite supply or demand. So the idea that the more times a level trades, the stronger it gets, can be quite a dangerous belief to enter the market with. If you're able to identify a supply or demand event as soon as it happens, you're extremely well placed to capitalize upon assessing the quality of that level the next time it trades, and then make informed trading decisions with very tight stops for low risk and favorable risk to reward ratios based upon having a defined target and a well-defined entry point and stop. If there's one thing that you take away from this webinar as food for thought, I'd like you to remember the Russian roulette analogy. If you just think that the more times you pull the trigger in Russian roulette, the less likely you are to have a good outcome, that's a very sensible way to be thinking about support and resistance. So today, if you are not yet making trading decisions based upon supply and demand, and you're looking at charts purely based on price and purely based upon derivations of price, then I think you're missing the full picture. And I would really strongly recommend that you invest in a platform that allows you to see supply and demand by visualizing traded volume, and take a leap of faith and actually remove every price-derived indicator from your charts. Now, it may be that seeing the footprint, the amount traded on the bid and the ask, is a little bit overwhelming, but it's possible to use regular candlestick charts and still visualize supply and demand. Here is a chart again of the Bund this morning, over which I've overlaid 2 or 3 order flow indicators combined with emoji zones. And I think you'll agree it's quite easy to read the strength of supply and demand. You know what? Very often we have users coming to us saying, will your system give us a red arrow and a green arrow for clean buy and sell signals? And we say no. What our tools do is allow you to visualize the locations of supply and demand and the strength and quality of supply and demand. And if you understand what these are and why they're happening, then you're in a position to make really well-informed trading decisions. But I think you'll agree, even just looking at this chart, without even knowing what the pink and the blue areas are, once you read the story that's on here, it's quite easy to make sensible, logical, well-informed trading decisions. So how do you get started? Well, at Emoji Trading, we offer visualization tools that make it simpler to interpret the traded volume. We publish these tools within Sierra Chart, which is a trading platform that includes a traded volume display like a footprint chart, which they call numbers bars. It's a standard feature. If you visit our website at www.emojitrading.com/trial, then we'll give you access to a free 30-day trial of our order flow suite. And this includes all of the visualizations that you've seen in the presentation today. If you're not currently using Sierra Chart, we can also get you set up with a free 30-day trial of Sierra Chart, including live market data. Now, this is an enhanced offer to what's available directly from Sierra Chart, and we make this offer of access to Sierra Chart and live market data for 30 days in conjunction with Infinity Futures. Neither the trial of Sierra Chart with live data or the trial of our visualization tools come at any cost, and this allows you to take 30 days to evaluate the Sierra Chart platform and Emoji Trading supply and demand visualizations that you've seen today. In order to get started, simply visit www.emojitrading.com/trial.